Venezuela's inflation is the highest in the world at 57%. The country's central bank says there is an economic crisis. Rachelle Akuffo spoke with Juan Carlos Hidalgo of the Cato Institute and discussed the impact that this crisis could have on Venezuela and its trading partners.
The president of the central bank was stating the obvious when he said there is an economic crisis, although he tried to downplay how serious it is. But we have seen that since President Hugo Chavez died over a year ago, that there has been paralysis in the government on how to tackle the major economic issues facing the country, most notably the big fiscal deficit. The fiscal deficit in Venezuela is about 16% of GDP, which has led the government to basically finance itself by printing money. And that's why you have the highest inflation rate in the world. 57% according to the central bank, although private estimates put it over 260%. And the way that the government has tackled high inflation by imposing draconian price controls has led to widespread shortages of basic staples and car parts and medicines. Over 1 out of 4 basic products is not on the shelves at any time. So I think that the president of the central bank was stating the obvious, but apparently there is a move from the most pragmatic elements of the government towards trying to ease some of the controls that have created some of these problems in the first place.
Now, it was Venezuela's soaring inflation levels that triggered the unrest, which has now spiraled into deadly protests. And the government has authorized a new currency exchange, the CCTV. What's your opinion on that, and how likely is it that it will succeed?
I mean, there is some mild enthusiasm about what it signals most than what it actually might accomplish. It signals that some of the pragmatic elements within the government are actually accomplishing, like implementing some of the policies that are needed to tackle some of these problems. So far, it's been the hardliners that have got the upper hand when it comes to imposing more exchange controls, more price controls. But now we see a movement towards a market-oriented system in order to allocate dollars in the economy. Now, the biggest problem for Venezuela is not the way that you allocate dollars, it's the shortage of dollars. Let's remember that 96% of the exchange that Venezuela gets comes from oil, and oil production has decreased significantly in the last decade, over 28%.
Over the last decade, Venezuelan oil has really helped the Cuban economy. Now, what are the implications for other countries that rely on these commercial relationships with Venezuela?
Cuba, who receives an oil subsidy that amounts to 6% of GDP, it is estimated that without this oil subsidy, Cuba's economy might implode, because it's actually in a weaker position right now than it was in the 1990s when the Soviet Union collapsed. So I think that's why the Cuban government has been deeply involved, not only in managing the succession from Hugo Chavez to Nicolás Maduro. Many people claim that Nicolás Maduro was actually handpicked by the Castro brothers, but also in making sure that the different factions within Chavismo, within the government, remain together and do not fight each other, because that will eventually compromise the stability of the Maduro administration.
How will the CCTV limit the use of currency exchanges on the black market?
Well, actually, the announcement of the CCTV had a minor effect in easing the black market rate. It was over 80 bolívares a week ago. Now it's 73. This is still almost 12 times the amount of the official exchange rate. I think that the best way is to make more dollars available into the economy. The problem is that the government's reserves are dwindling. They have decreased by 28% in the last year. So the only way to get more dollars is either by indebting itself, and nobody wants to borrow more money to lend more money to Venezuela. Actually, there was a report by Moody's a couple of weeks ago saying that Venezuela is the second country after Argentina with the most likelihood of defaulting on its debt, or making the country more attractive for investment, trying to bring people, that people can bring back their dollars that they took away from the country many years ago. But that will require a major shift in policy, and we don't see that the Maduro administration is interested in doing that.
That was our own Rachelle Akuffo speaking with Juan Carlos Hidalgo of the Cato Institute.